Hello traders and welcome to the London Forex Broadsheet's daily video wrap of the markets for Tuesday, July 22nd. The euro fell against the dollar by the most in 2 weeks as supply concerns regarding oil eased, and the euro-oil correlation holding during the New York trading session as oil fell as much as $5 per barrel. It seems that traders forgot all about the failed US-Iranian negotiations over the weekend. The euro-US dollar traded all the way down to the LFB S3 at 1.5755 during the afternoon trading session in New York. This was helped in no small part by speeches by Treasury Secretary Paulson and Philadelphia Federal Reserve Bank President Charles Plosser. The 4-hour chart reveals a very interesting chart pattern that, if broken, could lead to strong momentum lower. In the moves higher, there have been 4 occasions that the euro has dropped heavily for 2 4-hour candles. The moves are then consolidated and gradually reversed. They are correlated to moves made in the value of the dollar as oil prices moved lower. We are at the sell channel support line at 1.5780. This is an area before that has held up well, but now you can see that 1.5650 and 1.5500 are the next major support areas. The 5750 to 5650 and then to 5500 area may be tested if oil moves lower. The pound fell during the afternoon as oil fell and traders digested the hawkish comments by Philadelphia Federal Reserve Bank President Charles Plosser and dovish comments made by Chancellor Alistair Darling, who said in an interview with Bloomberg that the effects of the squeeze on bank lending are worse than previously expected. UK government bonds rose for the first time in 5 days, with the yield on the 10-year gilt falling 7 basis points to 4.98%. This was after Bank of England policymaker David Blanchflower told the Guardian newspaper yesterday further cuts are needed because the economy might contract for 3 or 4 quarters. The pound is sitting at support at 1.9850 and on a trend line that has managed to hold higher, but looking at the setup it looks as though a break of 98.50 easily draws in 96.50. There's not a lot of support in between. The UK economy will not offer any resistance to the pound going lower. The fundamentals are looking pretty poor. The Aussie has created a weekly chart doji candle, a reversal signal of a weekly uptrend, at the close of last week's trading. The Aussie is declining further this afternoon as the stronger dollar feeds into lower commodity prices. Once oil started the ball rolling, other energy commodities like natural gas followed. Gold joined in as well, losing 1.9%, which is the most in 6 weeks. The Aussie has drifted lower all day, reaching a level not seen since last Thursday on 96.85 as stop-loss selling weighs heavily on the pair. The 4-hour chart is showing that 96.80 needs to hold as support. We have seen in recent trade that 96.50 as an area of old resistance that is now new support, and may not be strong enough to stop the momentum building for the short side of the pair. The upwards test of 96.50, where the Aussie spent forever before it broke higher, really was hard to get through, and now a retest may send the pair back into the channel. We have seen it so many times after tests of all-time highs that a pullback is not always what the commodity needs. Sometimes an outrageous sell-off ensues and really clears out the weak hands. The 96.50 to 9500 to 9400 areas are now looking really interesting, especially if gold prices pull back heavily. The loonie rose by the most this month, 1.1%, as oil fell as much as $5.41 or 4.1% to $125.63 a barrel. Also hurting the Canadian dollar was Tuesday's worse than expected retail sales report. The sleeping giant awoke today and mustered the strength to test the buy side of the 4-hour channel at 1.0115, and as we can see the pair now rests at support at 1.0080. Both areas have acted as support and resistance recently, and both have created volatility that has not really led to much follow-through. The pair is still in short mode, but after the US dollar bounced today and weak retail sales from Canada, the question will be asked as to how long it will be before it reaches 1.0240 and the top of the channel. The Swissy rose as the fall in oil gained momentum, surpassing the LFB S3 at 1.0294 at one point before finding support on a retrace. Switzerland's trade surplus rose to a fresh all-time high in June, helped by demand from emerging markets, but overall exports slowed as economic cooling in the United States takes its toll. The June trade report published on Tuesday showed the weaker export performance also underpinned views that the Swiss National Bank will hold interest rates steady despite high inflation. The pair broke higher and in one move took out the resistance channel that had held it back since the 17th of June. We know that the upside areas of note include 350, 480, and 520. The question now will be, can global equity markets trade higher and allow this pair the chance to test those areas? Dollar strength and weaker oil are affecting equity moves and treasury yields. This is a pair that we get great intraday read on overall market sentiment on the dollar, and right now the sentiment is to buy the pair. The yen fell in overnight trading after poor profit reports from American Express, Texas Instruments, and Apple Computer. Once it became established that oil would fall and equity markets would find support, the yen weakened to its lowest level against the dollar since July 15th, finally finding resistance at the LFB R2 at 107.43. If the breakout candle can hold on the pair, we will likely see a test of 107.50, 108, and 108.50 over the next few sessions. Those tests will require positive equity moves and will be tough to break, but watch a move above 108.50. It is likely to force a realignment of the wall of sell orders that have been parked at the area. If global equities do move higher, the topside moves could be very impressive. On the upcoming economic calendar, major releases are the MPC meeting minutes out of Great Britain at 4:30 a.m. Eastern Date Time, and at 0700 Eastern Date Time, we have the Canadian Core CPI. In Asian equities, shares traded mixed in overnight trading. The Nikkei advanced strongly, recovering yesterday when the market was closed. The Nikkei rose 167 points, or 1.31% to 12,970, while the Australian S&P ASX declined 60 points, or 1.21% to 4,951. European stocks closed mixed. The Dow Jones Stock 600 lost 0.5% to 280. National benchmark indexes retreated in 14 of the 18 Western European markets. The UK FTSE dropped 0.7%, France's CAC 40 was unchanged, and German DAX gained 0.3%. The Stock 600 paired a decline of as much as 2.2% as retailers and airlines rallied on the drop in oil prices. Wall Street closed higher. The Dow was at 11,602 after gaining 135 points, or 1.18%. The S&P closed at 1277, up 17 points or 1.35%, while the Nasdaq finished trading at 2303 with a gain of 24 points or 1.07%. Stocks were boosted after oil fell and Wachovia's CEO announced plans to cut expenses. Crude oil closed lower as concerns regarding Tropical Storm Dolly eased. Oil for August delivery fell $3.09 or 2.4% to settle at $127.95 a barrel. Gold closed lower. Futures for August delivery fell $15.20 or 1.6% to $948.50 an ounce. This is the most in 6 weeks as a drop in energy costs and a rebound in US dollar reduced demand. Treasuries fell as equity rose in afternoon trading. The yield on the 2-year note advanced 13 basis points to 2.72%. The benchmark 10-year note yields increased 7 basis points to 4.11%. Overall, this storm shall pass was the order of the day as news which indicated Tropical Storm Dolly was expected to miss most major oil and gas installations in the Gulf of Mexico eased supply concerns and helped oil fall as much as $5 a barrel during New York trading, which boosted the dollar. The good news on oil was able to offset poor profit reports from American Express, Apple, Texas Instruments, and Wachovia, which had caused U.S. equity futures to fall as much as 1.2%, while taking the dollar to fresh lows against the euro, pound, and yen in overnight trading.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services LLC. All rights reserved.